Hello dear traders, we are glad to welcome you on InstaForex TV channel. You are watching economic news with me, Takhmina Salomova. Traders are braced for another turbulent week. The US dollar is set to trade with high volatility as investors turn their attention to the Fed's two-day policy meeting this week. Meanwhile, the greenback's dynamic depends on forecast of the central bank's policy update. Analysts believe that the rate-setting committee could take a break in the cycle of monetary tightening. Fed's leader Jerome Powell is widely expected to acknowledge growing risks to the US economy. Such expectations pushed the US dollar down. Its index rebounded from 95.70 in the late North American trade to trade at 95.80. Apart from the Fed's cautiousness, demand for the US currency decreased after the news that the US government was reopened following a prolonged shutdown. US President Donald Trump and lawmakers struck a deal on Friday to end the partial shutdown. The work of the federal government will be funded until February 15th. Market participants are closely monitoring political developments, opting for the US dollar's rivals. For example, the yen asserted its strength versus the American counterpart during the Asian trade. The dollar-yen pair is trading at the level slightly above 109.40. This week, the US and China's officials are holding the first round of the trade talks. That's why some assets are gaining ground versus the US currency without big efforts. Interestingly, the Aussie dollar is winning favor with investors today despite the bank holiday Australia Day. The Australian versus American dollar pair bounced to the level of 0.72200 and after correction settled down at 0.72180. Analysts do not expect the pair to trade high for long. The economic calendar today lacks major statistics. During the European session, investors are anticipating speeches by ECB President Mario Draghi and Bank of England Governor Mark Carney. That's all for now. Thank you for watching. We wish you profitable deals. See you later.